Hi guys. So again, I haven't done a YouTube video for some time. I've posted a couple of streams recently on TradingView, but again, for me, there's not all that much to say just yet, right? Now, I know crypto's going kind of crazy mad in terms of the Twitter kind of content, other social media platforms, all the influencers jumping on the bandwagon. We've had this kind of bull flag, bull flag, bull flag. There's a wedge, there's a line that is crossed, there's a 2,000-day moving average that we've touched. Guys, it's it's not what you really want this to be just yet, right? Now, I know a lot of you will feel that myself, even Paul, are kind of, perma bears. The reality is, since we started putting these streams live, we started talking and creating the Discord channel, there's not really been much in terms of positivity for the whole of the crypto market right now. Again, I've been very fortunate myself. I'm a technology investor, been a long time VC, and I was involved in Bitcoin in 2011. Okay, so I've seen the kind of the growth, but I've also gone through from 20 plus years of trading experience. I've gone through the logic and the reason step by step, post by post, the education we've created and the content within that education. It just kind of summarizes the true logic as to where we are, right? So if you want to go and look for moon calls and when Lambo, then yeah, definitely guys, this is the wrong channel for you. But I think if you want to take trading serious and you're looking to make money long term, you're looking to stay in the game for 20 plus years like myself, 30 plus years like Paul, then guys, you've got to take this serious. You wouldn't go in looking to get, a doctor's degree and watch one two YouTube video and expect to master the art. So from our point of view, trading or professional money making is no different. You're not going to watch a moon Carl or see a Plan B tweet and expect to become wealthy overnight, right? These guys are looking at trend lines, they're looking at moving averages, all the things that newbies are kind of playing with, right? And the trouble being, when you understand this from a much bigger picture, these guys make money from affiliate links, right? If someone's got a Bybit link, run, right? And that's kind of the first bit of advice. So what I'm going to do, right, is rather than just kind of harping on in terms of where we're not, I'm going to give a little bit more detailed explanation as to where exactly we are. Okay. So before I do that, what I want to do is to just kind of emphasize, look, trading is not easy, right? And I'm going to say that kind of outright. If you really want to make money trading, you really need to learn. You need to take a step back and understand the fundamentals when looking at the chart, right? And I don't mean fundamental analysis. I'm saying the fundamentals of what the price action is telling you on the chart. Crossing some imaginary line, touching some rainbow chart, 2,000-day moving average this or pi indicator that. It's nonsensical, right? If you look at any form of log chart, yes, we go up, right? Now, I'm glad we went up from 69 to 15K, right? That's kind of the logic that these influencers are deploying, okay? They're all trading demo accounts and they're selling a false dream, okay? So when you look at these charts, first thing we're looking for is ultimately a bias, right? Now, I've mentioned this, like I said, going back 2 years plus in terms of making our posts public. I actually put a post together just before Christmas that Paul shouted at me for doing this, but in essence, I missed all of the links. So Paul actually went behind and kind of cleaned up the post and posted this again on TradingView with all the links attached. Okay, so in this particular post, and I'll leave a link to this probably in the top right hand corner if I can work out how. Obviously, I'm not a streamer, guys, so kind of bear with me in terms of the quality of the actual production itself. Okay, so look, first things first, May 2020, right? This was obviously talking about the long, right? Why I was taking this trade long, where we were likely to go and why, right? For me, this is something that, I didn't advertise. As you can see, there's 9, boosts in terms of this post, right? And I'm kind of giving you the calls, right? Now, beyond the calls, as we started to kind of show and justify these price actions, I went into a little bit more depth. Right now, at this particular point, I was still very much involved with what I was doing on management of money. So wasn't really able and kind of technically allowed to give depth in terms of the information. So I was trying to hint at this particular point without giving kind of too much away. But again, as you can see, I was talking about the reaccumulation at this particular point, right? Going back to 2021, I'll show you this in terms of where we were on the charts, right? This is 2021. You can kind of see in terms of the reaccumulation, right? This was the reaccumulation that I was talking around there, right? You can see these levels back to what we done with Paul's post. This was January. Why this was actually the reaccumulation, okay? Then ultimately, as we started to move up, I talked about the institutes getting involved in the market. I explained again, kind of in detail, a little bit vague, but in detail as to why these kind of key levels were being used, right? And again, this is from a professional money management perspective, why these key value areas are used and used again, how they are used, and if this isn't kind of giving you the keys, then I don't really know what is. Okay, so in essence, going through these individual posts, and like I said, you can see all these through. Probably Paul's is the easier post to follow. He's actually got all of these links. But as you can see, right, if I just press forward on some of these moves, right, you can actually see, you know, the dead center of this move was back to the previous value area that was called, you know, January through to May, right? Center of the center there, roughly May. So, a good couple of months in advance as to why we were likely to go back and collect the liquidity at these kind of levels, right? So, as you can see, kind of step by step, I wanted to kind of put it out there, walking through this kind of Wall Street cheat sheet in terms of, why we were doing the things that we were doing, right? Now, again, this particular one, I know this is one that if you've already followed me for some time, why I was calling these calls, why these moves up from here, why the moves down from there. Okay. You can kind of see from what I was looking at and why I was looking at these levels were coming back to the same levels that we've already discussed, we've already shown. And at this particular point, I had a lot of people say to me, "Oh no, you're wrong. This is the reaccumulation. This, that, and the other." Guys, there's always an opportunity to be wrong when it comes to trading, crypto, the markets in general, right? Nobody's right 100% of the time. However, the one thing a lot of people missed at this particular point was the fact that we had this kind of AR move giving us a very quick response to that buyer's climax, right? And that was kind of the telltale sign very early on, right? Now, as I said to you at the start of this video, I'm going to go into a little bit more detail in this one to kind of show you, what I'm seeing and kind of why, right? Now, for me, the beauty of this particular move was this was kind of Wyckoff based with a slight mixture of Elliott in terms of the bias, but in essence, the target was always going to be the kind of orange zone, right? Now, again, in terms of trading, the time factor is always going to be a difficult thing, right? The levels are easy, right? And for 20 plus years of experience, I'm telling you right now, the levels are easy, right? Getting a level, knowing where the price is going, why, is almost the easiest thing in terms of trading, right? A lot of people don't understand this. A lot of people don't understand why the price comes back or goes to the kind of key levels, right? This is the kind of thing that we can show you and show you inside out, right? So press play. What actually happened was we actually come to this level a little bit quicker than I assumed. This for you, right? So the price dropped down and tagged A perfectly, right? The price moved up and moved above the current level by about 2,500 K, which meant we dropped down for C, and C actually then rose by the same 2,500 K over that level. Okay, which meant we had the A, the B, a slightly deeper C with obviously a higher B, followed by the D. Of course, D come up 2.5K, but ultimately we then kind of rocketed down in terms of the fall. And that N4 was always, like I said, going to be that target, right? The target is very kind of almost setting its course from early on, right? And you can see this, like I said, miles and miles away, right? And I'll see if I can find a post on this later in terms of even the move back up from these levels. Okay. Now, let me see if I can zoom in a little bit further. Now, obviously, what I've talked about there, right, is why we were doing what we were doing. I've gone into a little bit more detail in terms of the Wyckoff schematic. Now, at this point, I was kind of able to, I suppose, talk a little bit more freely in terms of some of the logic behind these moves and these posts, right? So, as you can see, our indicator, it shows that the sell me now, the sell me now, the sell me now, the sell me now in terms of the calls. And the general idea is that when we're looking at these particular calls, it's the Wyckoff distribution and accumulation moves within the Elliott bias is what we're actually looking at and looking towards. Okay. So again, as you can see, why we can call the tops and why we can call, a lot of these bottoms, why we want to take these moves short, when we're taking them. It's not because we are constantly bearish. We're longer term trading, right? And therefore, every little move is not the move we're looking for, right? We can do this, and as you say, we can give you these, we can give you these, that's not a problem, right? Even the indicators themselves, you can see the signals that are generated. The reality is, guys, as a professional trader, you're not ever looking for tops and bottoms, right? That's kind of the danger zone. What you're looking for is the juicy stuff in between, right? Once you get that confirmation that the price has moved away, maybe from your bottom, then that buy becomes an awful lot more profitable, an awful lot more successful in terms of that, like I said, as the confirmation, but an awful lot less stress free in the grand scheme of things. Okay. So coming obviously then down, I put a stream replacement. This was private. This was only to the subscribers on Discord. I'd actually gone through kind of step by step. We put this on mute. I'd actually gone through step by step as to why we were likely to do what we were aiming to do kind of next, right? So this was clearly on the way down, right? Now, what I've shown in here, and I'm just going to pause it there, is that this 1, 2, and 3 move, okay, this is basically the Weiss waves move. And we could see that the 3 had just kind of finished, 4 was just about to start. It's on a monthly time frame, okay? So again, a couple of key levels to watch out for. This was all shown to the subscribers kind of at the time. But in essence, you can see from this, we can't replace this in terms of TradingView. These posts are all immutable in terms of putting out on TradingView. And the general idea for me walking through this now is just to show, one, where we've been, but two, how useful these techniques are for predicting where we go kind of next, right? Now, I'm going to go into this, in an orderly flow in the chronology of where we go next. So kind of stick with me on this a minute, right? I want to go into the depth of this to give you guys a little bit of an advantage in terms of where and why kind of next, right? So this is me talking about the value areas. I'm not going to play the whole video, like I said, just put this on mute, right? This is talking about the key levels in terms of down to this level. We talked about the 28 from the move before, right? And then why, in essence, we're going to be seeing then an accumulation range before moving on back up, right, into this kind of region before we then start to see the 5, right? Now, just to finish with on this particular post, this is the one that I'm looking for, right? And I'll show you this from August on the way back up. I talk about the truncated move in the August, right? This is the June. So in the June move, right, the accumulation phase starts, as I've just identified, starts to kind of play itself out, right? It's very messy, very ugly, but we were only looking at a weekly 3-4, which meant we were aiming for a targeted 5 region big picture, right? So I'm going to get out of this. Now that big 5, right, is when we started looking at moves like this, right? This was the position in terms of, leaving that zone, leaving the 1 to 28, right? And starting to go. Now, the problem for me with this particular move, right? This was only, like I said, the weekly 4 to 5 after we had the call drop down, is that in this particular section, what we saw very early on was the range that the price had dictated had already predetermined the top of the levels that we were forecasting, right? Now, bear in mind, people like your Plan B were calling for 135k at the top 69, right? So if you imagine something like this, right? This is what your crypto influencer was looking at, right? At this point in time, was to see something, right? By the end of December, right? Or by December, or whether it was the end or the start, it doesn't matter, right? And to see a price something like this, right? And let's go into the first week of January. So let's just give the benefit of the doubt, right? You know, guys, when you've done this for 20 years, it's as clear as day that we weren't going to see a price movement like this after a rally like this, right? The trouble is, people only want things that reinforce their own beliefs, right? And it's just not accurate, right? It's not useful. It's not beneficial in any way, shape, or form, right? When you put that on a chart, right, you can almost say how silly does that look, right? Our target at this time frame from this move here over several months, right? You would have needed, yeah, trillions of dollars going in. I mean, trillions of dollars. You would have needed a country like the US to say, hey, we're throwing the dollar out the window and we're going to be using Bitcoin only from now on. That could have given you this kind of move in this kind of time frame, right? That's how ridiculous this seems, right? So when we started looking at these moves up, right? And again, we've covered this. Like I said, you can come into these posts, you can see this, kind of step by step, right? We've talked about these moves. We've talked about these scenarios, right? This is again another private one shared to the subscribers. We've talked about why the 3 down to the 4 up for a 5, right? 5 closing and finishing. This was 2nd of September. Let me see if I actually put this in the post before. No, it was the one after. So, click forward on this, right? And as you can see, we done 3 to 4 up to 5. This is not rocket science, guys, right? This is pretty straightforward when you know what to look for, right? So from this particular move, we then come on up, we get to the extended high, right? And let me see if it's in one of these. I've put the post which talks about the expansion up. Yeah, probably in this one here. Okay. So this was on the 24th of August, as you can see on the date here on the left, right? I'm going to zoom into the center. Let me just double check that you can see it. Okay. So I'll give you a couple of seconds to read this for you guys who don't speak English maybe as your first language. So what I described in this particular post was the reason that we were already targeting kind of liquidity up and around the highs takes us to a point where we were only likely to grab newfound liquidity. And when I say newfound liquidity, I'm talking about the liquidity of new buyers coming into the market, right, above the old all-time high. It's almost like let's wait for confirmation and then let's buy at a price higher than it's ever been before, right? Now, that will happen at some point, but you're going to need the big players to support that action, right? And we could see, prior to this move, on the way up from, June, July into August, we could work these levels and figures out as to then why I wasn't interested in taking a trade at around, 35, 40k with a risk reward ratio of a 20k stop loss and a 60k take profit, right? That's a 1-to-1. That's a very poor trade in anyone's books, right? So knowing where we were already heading, knowing why we were going then kind of back up to create, a double top in essence, right? It's a couple of K over on a 65k, level kind of range. And the reason that I've suggested that we were going to see all new buyers at 65k, and then we're very likely to see 40k again very quick, right? So I've broken this down, like I said, step by step, detail by detail, right? And to give you an idea, let's go into the 24th of August, right? So this was this particular move. Sorry, on the way up here. This was August, right? So the week before. This is why I'm talking about, right? Now you can see from there, you see back to the chart, why I'm talking about a drop down for a rally up back to the 65. And again, what did we do? Well, we actually we dropped down. There's your drop, right? There's your rally up to 65, right? So the logic when you see this truncated move meant that we were now at a monthly three big picture, right? Now, we could argue that everything kind of before this was just kind of noise, right? This was a lot of tech investors, a lot of kind of gamers and people that were, I suppose, kind of newfound thinkers in terms of the market, it, you know, kind of, $3 million pizzas being sold and so on. The kind of people that were active at this particular point were not the big institutional players as we know them today, right? This was, a handful of decent sized investors. This was a lot of people that had the vision for Bitcoin and crypto kind of early on. This was people almost tinkering with it rather than using it, right? It wasn't until this particular move that we actually saw some real intent from some real big players, right? And for me, I remember this well, right? This was a good time, throughout crypto for me. This was a good kind of investment stage in terms of some of the technology startups and so on. So when we take into account kind of where we've been, where we were going, right? I'm going to carry on kind of the story because this will take us into where next, right? Now, a lot of people will just want to jump to the end and it's like, well, it's kind of, it's not as simple as that, right? I'm not here to give you guys signals. This is to give you guys a clue, right? This is to give you guys an understanding and appreciation for yourself, right? So actually on that particular topic, I'm going to cover something else right now. This isn't just kind of marketing. This is something that I'm kind of proud of myself. I never thought that I would have done something like this. So in May this year, I've actually got a book being published by a reputable publisher, which is pretty cool for me. Um, this actually goes into a lot of depth in terms of my strategy, Paul's strategy, what we talk about in terms of Mayfair, what we teach in terms of behind the scenes. And this is a kind of tell all type of story. We've put it into a chronology in terms of how this will read if you're a novice, jumping from very, very early on, what a trend line is, through all the way to some kind of very advanced techniques that we use that are advanced in terms of their nature, but very simple when used correctly. Okay. So obviously you can pre-order this now, but in essence, May is the actual launch, the official launch date. There's still a few things happening behind the scenes with this, but I'm really excited for this, and I'm really kind of proud in terms of sharing this, with the general public and kind of putting this out there. So that's my kind of plug for the day. There's no Bybit link, there's no kind of sign up bonus for this. This is literally, a kind of a tell all tale in terms of how to read and how to master the markets. All right. So back to obviously the kind of the posts and the levels, the understanding of why we were doing what we were doing, where we were likely to go kind of from there. We then talked about the kind of move down, right? And then the move back up. Now, at this particular point, we were very active in terms of what we were doing with Discord, kind of sharing this with the subscribers. The problem is a lot of people again want things that reinforce their own beliefs, right? We had crypto influencers saying things like, if Bitcoin doesn't hit 100K by the end of the year, I'm deleting my Twitter, and they're still active, right? People want to follow kind of idiots when it comes to what they believe in themselves, right? They just want what reinforces their own belief. I bought Bitcoin at 69K. If I follow Plan B, he might tell me when it goes to 135. You know, Carl, Moon Carl, the guy have said stupid things like, 100K is only half of 50. We're actually there, we're nearly there, 50K, how quick can we get to 100? And we still haven't hit 100. That's nearly 2 years down the line, right? if you've gone in and you've bought or you've been involved for the wrong reasons, right? Now's the time to learn, right? You might be carrying lots of red bags. You might have been lucky and already out of the market and kind of sitting on the sidelines waiting for an opportunity. Guys, we're in a massive, massive accumulation phase, right? And I'm not saying now is the time to buy because there's a bit more to it than this, but you don't really want to miss the market and miss the opportunity, right? We've got global inflation, right? We've got the potential for World War III kind of lingering on the horizon. We're in a situation that's really uncertain. We've just had Christmas. There's a lot of money goes out Christmas time. There's a lot of people that have lost jobs recently. I know Amazon have laid off, and Microsoft have laid off, Facebook laid off. Thousands of people. So I know the economy, in the grand scheme of things, is not in the best in terms of the situation at the moment. But you can't come to crypto or trading, any form of trading for that matter, expect to watch one YouTube video and go out there as if you know the whole market, right? It just doesn't work like that, right? If it was that easy, everybody would be doing this, right? So, in terms of where we are, and I'm nearly kind of at the where we go next, right? Is that you might have already been bored, you might have already clicked fast forward, and if you have, kind of more fool you really in terms of not understanding, why we're talking about the moves we're talking about. Okay, so I'm going to finish off on this one now. This particular move, right, was again a kind of a hint in terms of the market, right? This was kind of the timing for this was seeing what we were about to do, right? We were from this bottom, we were coming up, we were coming down, we've gone back up, we've come back down, we've gone back up, we've come down, right? Now, what do you think we do next? Okay, we do exactly this. We break it from the trend line and we break through the trend line, right? Now, in the grand scheme of things, all I've shown you through every single post in Paul's overall post here is that we've just gone through this particular sequence, kind of step by step, right? We had the hope and the disbelief, this is where I was telling you guys to go get long, right? We had the optimism and the belief this was the reaccumulation, right? We already got to this kind of thrill stage by the time I'm saying, guys, watch out, rocket's about to crash. We're going down to the 28K. This is what we do, right? We then kind of grind back up, right? This move was ugly. It was inevitable, right? We get to this kind of complacency stage, and now all of a sudden the anxiety sets in because we've had three major candles, a weekly time frame, right, per candle per week, and we're in this position where a lot of newfound buyers, like I said, were buying above these all-time highs from before. So the anxiety sets in, right? You have crypto influencers using their demo accounts to to kind of buy the dip. If you look at how many millions they've lost on their demo accounts, you know, I mean, Carl's probably lost $1 trillion this week on his demo account. The reality is, buying every dip, right? Yes, you're going to look like a genius when you get it right, but they quickly delete the videos when they get it wrong. And they're wrong an awful lot more than they're ever right. Okay? So we've now gone through the full cycle. I've gone through post by post, right? We've then come to this point where, everyone thought, well, this is the bottom, we didn't get kind of as low as previously. This is what we would regard as the denial phase. There's logic behind that, common sense, right? The denial phase there is people not wanting to sell. This is like, I'm going to hold my red bags for a little bit longer until composite man comes along and says, no, I'm going to squeeze you a little bit more. I want a better price. I want fair entry, fair market value. I want to get in a little bit cheaper than what you guys are willing to give up, right? This stretches out the market, right? This is why this becomes almost like a curve, right? And then we obviously come back from depression into this kind of hope stage all over again, right? So what I'm going to do now, I'm going to show you kind of what next, right? So we've gone through this now depression stage, right? Now, what you need to look at is COT data, right? Now, this is the commitment of traders. If you don't know what this is, right, what I want you to do is click the link I'm going to put now up on the top right here, right, which is basically talking about the Skillshare course, right, that completely free. You sign up, you can cancel, you can go through it, and it'll give you a better understanding of Elliott, Wyckoff, the COT information, right? Now, this particular chart, right, is priceless. Right? This is basically the big boy. This is a very big sample size of the biggest of the big boys in the industry, right? So these are your kind of schoolyard bullies, right? These are the guys that know how to pull the strings. They're every teacher's favorite person. They're every little retail trader's worst nightmare, right? These guys know how to play the game. These are the professional money makers, right? These guys are the guys buying private jets with your pensions, right? In the grand scheme of things, what we can see going back more or less all of last year is we can see the giant scale accumulation with a relatively flat sell off, right? And when I say a flat sell off, this is left to right, relatively flat. When you look at the scale of accumulation, right, the moves are clear, higher highs and higher lows, right? And therefore, we are now seeing a better position in terms of the accumulation, but it hasn't ended yet. Okay, so flicking back to the chart, I'm talking now about an accumulation cycle, accumulation phase that takes us back to practically here, right? Now, that's not price wise, that's actual in terms of disbelief and hope, right? So, what I'm saying is that we almost start this cycle all over again, right? Now, some of you guys who are maybe into Elliott, you understand this, you're going to say, oh, well, we've breached the one, we've invalidated the level. You got to look beyond that, right? In terms of a monthly move, the levels that we've kind of tagged at, we are sat in what I would regard as a value area, value range. Okay. Now, I'm not saying, for a second that Elliott is perfect, right? And I'm not saying that you have to put all of your belief. This is why I don't like trading Elliott on a small time frame, right? It can work. Does it work all the time? Definitely not. Okay. What I use Elliott for is an overall bias. Why have we come back to the same kind of levels that would invalidate on regular charts? Guys, Bitcoin is not regular, right? Bitcoin is not the norm. We've got things like on-chain matrix and analysis, right? We've got the ability to see behind a lot of what's there. I've posted posts on TradingView, right? And I'll see if I can put this into the link as well below. I've talked about dark pools, right? And the kind of sharks that operate in the dark pools. There's a lot of things that retail traders don't get to see very early on. There's a lot of things they might never ever realize that go on behind the scenes. But in essence, understanding why we can still invalidate this, but also kind of stick to the rules, which is kind of contradictory of itself in terms of these rules and procedures, right? Now, the reason we've come back down is there's an awful lot of liquidity in and around this area. There's also a big desire for composite man, the big boys, to buy cheap, right? And there's a couple of other things that goes on. You got your clowns, obviously, on your Twitter and on YouTube and so on, and it's just almost prime for the logic behind these moves, right? So where I think we are currently, right, I'm gonna have to get rid of some of these on the chart to make a little bit more sense of this, right? So we've come back down to a simple value area, right? Now I've talked about this in the last couple of TradingView streams, right? We are very likely still only now touching into the phase B on an early scale schematic. Okay, so a couple of things for this and a couple of reasons behind this. If you look at the stochastic levels, we've now literally just this week come out of the false bar, a little red bar across the bottom, and we're already at the overbought situation, prime for a drop. Okay, Now, zoom out one time frame, coming into this monthly. We've just seen one large green candle, but we're already very near your 50% marker. Okay, so what we're very likely to see from here is a weekly drop on the charts, but the daily is not quite there yet. Okay, so the daily has a false bar to the upside. Okay, which means we could now go relatively sideways for a little bit of time. I would like to see this rising a little bit more as we move on up, and then I'd like to see a decent drop down from this zone, right? And in an ideal world, we come back down and make our STB. Okay. Now at this particular point, it's going to confuse the monthly close in terms of the stochastic, and probably flatten that out, plateau it to a point where we could even curve back down, go up kind of sideways before we then move back up again. Now the next move up on the monthly, I'd love to see a move come in from here back into the zone. Okay. Then once we get back into the zone, we don't really need to come down for a spring, so it's not the depth, as I've said for the last couple of months. We could literally come back down, curve up, and shoot off through, right? Now, at this point, it becomes exciting, it becomes interesting, kind of all over again. But until then, don't jump on every little bump in terms of the move up, okay? So, to finish with, what I'm going to do, I'm just going to touch on a couple of other things to, I suppose, give you a little bit more kind of info, right? We've obviously got the free Skillshare course there. We've also got the COT indicator available for free, so you can sign up for that. Now, in essence, the general idea for what we're giving here is we want to educate you guys before the markets actually take off. Okay, so don't miss the opportunity. Don't kind of miss the boat in terms of wanting to do this and not knowing when to do this. There's an awful lot of opportunity from, you know, a very, very low cost entry of a book. We've got a free indicator. We've got a free Skillshare course. So we're not trying to plug, anything else other than, guys, please take the time to come and learn. And that is going to serve you so well for the near and long term. And that's all I can say. All right. So I know I've kind of blabbled on this particular stream, but I know we're going into some bad times in terms of the recession, the global situation, kind of inflation levels, and so on and so on. We're very likely to see a lot of panic. The panic is good in terms of composite man, but very bad if you don't understand what's actually going on around the world and how to interpret that on a set of charts. All right. So, anyway, thanks for listening. I hope you enjoyed this one. Like I said, a lot more depth in this one. And I'll see you on the next stream in the next couple of weeks. Again, thanks, guys. Bye.